Hi, welcome back to another edition of Lipper's Fund Flows Insight Report. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the week ended Wednesday, January 23rd, 2019. Conventional fund business took in about $6.2 billion, second week in three that they've actually taken in money. And that's a report without ETFs. We're going to talk about ETFs later on and just kind of get an idea what mutual funds have been doing here. This was basically during a shortened Martin Luther King Jr. trading week. We heard news from the Wall Street Journal that the Trump administration was considering easing some of the tariffs in order to better strike a bilateral agreement, maybe get things rolling in a better way, and I think people really embrace that. And also, we've had an okay start to the Q4 earnings season this year. For this quarter, and I think it's a little bit guidance is a little bit off, and the profit wins, revenue wins are not as high as they've been in the past, but people are still seeing some good numbers come in as well. So it drove the markets up a little bit. So let's go ahead and see how this news panned out to the fund flows business and see how they did it on a macro basis. So we'll go for a macro basis view at first, and then we'll go from there. Equity funds took in about $3.5 billion. Again, this is ex-ETFs. Taxable bond funds took in about $979 million. Muni bond funds took in $952 million. And money markets took in $838 million. So it wasn't really a big week to talk about. I think people were a little bit hesitant on making big bets, just seeing where the market's going to go, learn more about the partial government shutdown, and also just to wait till earnings season starts really coming in. I think only about 11 or 12% of the S&P 500 constituents are actually in so far for the fourth quarter earnings. Well, let's go ahead and see how basically it panned out if we take a look at the equity markets by themselves. Equity funds had a 0.57% return for the week. It's the fourth consecutive week they actually had plus side performance. And for the fourth consecutive week also, we saw $3.5 billion this week come into the conventional fund business. So we've had some net inflows, which is a kind of a stark contrast to what we did for almost all of 2018, where we almost always saw negative flows. Domestic equity funds took about $1.7 billion, third consecutive week. They've seen that new money come to that group. And non-domestic funds took in about $1.7 billion as well, again, third consecutive week, with a return of about 0.52%. For fourth consecutive week. If you take a look at a breakdown, we saw large cap funds actually taking about $1.2 billion. That was the prior of 2018. And international equity funds took in about $1.5 billion as well. Now let's go ahead and turn our attention towards the equity ETFs. I told you I'd give a little brief rundown on that. And for the second week in three, we actually saw outflows, this time to the tune of about $6.6 million. Really, it was a push. Invesco QQQ Trust 1 took in about $1.9 billion. The iShare Core MSCI Emerging Markets Fund took in about $1.3 billion. But at the bottom of the barrel, we saw SPY, the S&P 500 index fund, basically hand back about $1.5 billion. Then the Financial Select Sector Spider Fund lost about $855 million. So not a big story there. Again, it was kind of a flat time period for ETFs, while mutual fund investors seem to be putting money to work. That could be just some 401k funding at the end of the year and the like. Let's go ahead now and take a look at the fixed income universe to see what happened in that group. Second week in a row that we've seen net money come into the group, this time to the tune of $979 million. It's the fourth consecutive week, though, they've had upside performance, 0.20 for the weekend of Wednesday. And we saw the corporate investment grade debt funds took in $718 million, while flexible portfolio funds took in $198 million, while balanced funds lost $168 million, and government treasuries handed back about $45 million. Let's go ahead now and take a look at the fixed income ETFs arena and see what happened in that group. Basically, we saw that they lost about $352 million, again, very low amount, but it's the first week in 10 that they've actually seen net redemptions. iShares mortgage-backed security, the MBS ETF, took in about $826 million. iShares JPM US dollar emerging market bond ETF took in about $449 million. On the opposite side of the spectrum, we saw iShares 3 to 7 year Treasury ETF lose about $617 million, and the iShares iBox investment grade corporate debt ETF lose about $605 million. Not a big story there either. So really flat for the ETFs this week. Now let's turn our attention to the muni bond industry. And actually, they had a pretty good inflow, $952 million. It's right around tax season. People are concerned and thinking about taxes now. So we saw $952 million. This is the third consecutive week they've taken in net new money. But it's the first week in 11 they've seen minus returns. This time to the tune of just 0.10% loss. So not a big deal. High yield munis took in about $383 million, while intermediate municipal debt funds took in about $169 million. Let's go ahead and turn our attention now to money market funds and see what happened there. We saw that for the 6 week and 7, they had net inflows. This time, they took in about $838 million, really a low number in comparison to what we've seen over the past several weeks. And taxable money market funds, how it broke out is we saw about $2.4 billion of institutional money go in, while we also saw about $3.5 billion in outflows. $3.5 billion in institutional money come in, and retail money handed out about $1.1 billion. Let's go ahead now and take a look at the tax exempt money market funds, and they lost about $1.6 billion. So that's kind of what brought us to that figure of $838 million as far as inflows go. Well, that's it for me. Basically, we're going to be keeping an eye on a couple of things. First of all, it's earnings season. On Wednesday, we heard some good reports. IBM, Procter & Gamble, and of course, United Technologies all had good earnings and good revenue. And actually, even their forward guidance looked pretty strong. Also, we heard earlier today, that basically that the government has actually come up with an agreement to open up the government, get rid of the partial government for at least 3 weeks so they can negotiate better terms. So I think investors are going to keep an eye on kind of those three things. Earnings being good, keeping an eye on the China deal, whether that's going to be made or not made, and then also taking a look to see what happens over the next 3 weeks with the partial government shutdown. Well, if I haven't done a deep enough dive for you and you'd like to do a deeper dive, you can go to our site at www.lipperusfundflows.com, or you can wait till next week when one of our analysts will talk about the flows trends for that week. Thanks for joining me. My name's Tom Roseen, wishing you the best in your wealth planning and creation.